Hello, Jim here. One of my favorite things to do is to look back at the previous month, look at my trades, how I did both with the premium from the trades as well as dividends and interest. So today I've actually got one of those reviews. I'm going to review my trades I did last month. I'm going to talk about what went well, what went wrong, how much premium I brought in. And I had quite a few positions get assigned, which is fairly unusual. I'm going to talk about how I handled each of those and what I plan to do going forward with them. So be sure to stay till the very end because I'm going to do that piece where I actually show you the trades and show you the overall monthly picture at the very end of the video. But that being said, let's go ahead and jump right in and get started. Now, in every video, I like to start out with that one of my main goals is finding the best companies, companies who have low debt, good profitability, good year-over-year earnings that are poised to probably have some really good appreciation down the road. Now, does that always happen? No. With this latest earnings season, it seems like if a company misses earnings, they just get hammered. If they also give poor guidance for the rest of the year or the next year, they also get hammered. And I believe that's occurring more than it used to. It almost seems like the markets are not as efficient as they used to be. So I do have a few of those. I had a few companies that I have invested in that I've looked at those categories, the fact that they may have low debt or no debt, have good profitability, good year-over-year earnings, and you can't really prepare for a surprise, meaning something that you don't foresee coming. And so some of these that did get assigned early, it's primarily because of these kind of situations where the stock has dove a major amount and you get into a situation where you really can't roll. And that's when you need to look back. You need to remember why you made the original trade. So when I go over the specific assignments, I'm going to talk a little bit more about that and why I've decided, in most cases, to hold the companies. Actually, with the exception of one, which is Walgreens, I may use Walgreens as a way to lower my taxes. I might be able to use it against other gains, at least at this point. I typically don't do that till the very end of the year, but again, you win this battle of investing and selling options by picking the best companies, picking the right companies. So with that being said, I also like to reiterate using safe strategies. I like to encourage people to not take a huge amount of risk. You'll notice with these assignments or the options I do make, I don't do a lot of contracts. I started with one, I went to two. In some cases, I'll do three, four, five, but I typically don't go really high in the number of contracts. To me, it's still investing. It's still picking good companies and owning them for a long time. Every company that I've owned and every company I will probably continue to own goes through rough periods. I know, I believe NVIDIA was down just recently around 13 or 14%, but I've seen that with Coca-Cola. I've seen that with Apple. I've seen that with pretty much every company out there. So they all have rough patches. It's not a steady climb. It's usually kind of peaks and valleys, and hopefully you're having, higher peaks and valleys, not lower peaks and valleys. So I always like to start with that and the fact that to be a good trader, especially an options trader, you really need to be using safe strategies and then also have what I call guardrails. Look at when you make trades, have a specific delta in place. I like a 15 delta currently for puts and around a 20 delta for calls. Also, depending on how far out you go on the trade, the safer it might be. Depending on, some people may say, well, that's the reverse. Actually, a trade that's only a week, with a DTE of a week is safer than a farther out trade, but that's not necessarily true, especially if you're dealing with puts, so if you're looking at an expiration that's a week away, you're going to have to pay a lot more for that strike. So if it's $100 stock, you're going to have to pay, the strike will have to be like 97, 98 for like a 15 delta. Now, if you go out 2 weeks, that strike can go lower at the same delta. 3 weeks, even lower. A month, even lower. 2 months, significantly lower. And then when you get into ETFs, which just by nature are a little bit safer than stocks, again, you can pick safer strikes by using delta. You can also learn the right way to manage trades to minimize any issues you might have. One change I've recently made, and it took me a long time to kind of get this through my head, is to avoid earnings. And that's one thing I'm being a lot more diligent in. Now, if you trade ETFs, you don't have to worry about earnings. It makes it a little bit easier. So having some guardrails, I typically have a good number of guardrails. I share them with my memberships. I release what I call a planning worksheet every week. Originally, it just had the trades for the 3 weeks. Now it has all my open trades. And I also have a tab in there that has the guardrails, has the criteria I use to be sure I'm making good trades and safe trades. Now, what ends up happening when when you're making safe trades and you've learned how to trade and you're not having losses, you've had some wins, you end up realizing you have multiple income streams. Suddenly you have income coming from selling calls, you have income coming from selling puts, you have dividends coming in from the stocks that you own that do pay dividends. You also have appreciation on some stocks, depending on if they're growing. And then you also have interest. Now, recently with much higher interest rates, it can be fairly significant. And I guess I'm earning around a little bit more than 5%, both at Fidelity and Schwab. I have to move the money in and out of a money market. And again, I'm earning, I believe, like maybe 5.25 or 5.10 or something like that. But that can add up pretty quickly, especially if you're selling puts and you have a lot of cash available. It does give you a really nice boost. And what's nice is you can look at those as all different income streams. And then you may have some additional income streams. Like me, I still consult, so I have that income stream. I do make a little bit from YouTube for AdSense. So you end up having more and more income streams, which I think is really important. It gives you the ability to be financially free or to retire early. To me, I don't know that I'm ever going to completely retire. I'm going to do the things I want to do with people I want to do them with. And some of that is working. I enjoy working. I actually enjoy programming and coding too, and learning new things. So my retirement is going to be a little bit different. I've been working for myself since 2002. I've had an S Corp, and for many, many years, I'd work 6 months and then I'd take 6 months off. Now, I really didn't take 6 months off, but I would take that 6 months to work on the projects I wanted to work on, some of the same stuff I'm doing now. Now, another key criteria, and I get this a lot from both members and subscribers, when they ask questions, they want to know, what my goals are and could they achieve my goals. I always have to tell them it's what I can achieve. You need to set your own goals. So I think goal planning is really a big deal. So, and to start small, I've been trading for a while and I've been able to make the numbers I've made by trial and error, learning the hard way in some cases. So I encourage people to kind of set your own goals, start small, and then do reviews like this on a monthly basis, or maybe every quarter or every 6 months. And then if you've been able to beat your goals, and increase them. But don't rely on what I'm able to do, because that's what I'm able to do, not necessarily what you can do. And maybe you can do better. I do want to take a second just to talk about my memberships. So I provide all this kind of information. I talk about setting goals. I talk about my trades. I share all my trades. I have 3 levels of my membership. I have what's called the Investors Club, and you get access to my trades. You get access to my spreadsheets, my collections, almost like a semi-class that I have. It's 6 lessons that I set up a while ago. I've updated them recently. So you get access to that. Now, the next one is Traders Club, where in that one you also get the Discord, and the Discord's gotten quite active. I have a lot of members sharing their own trades and then asking questions of each other about other types of trades. Some people doing 0 DTE, some people dealing with futures. It's gotten pretty interesting. I'm learning a lot too. So that one is what I call my traders club. And then I also have every other week a meeting where everyone that's in that level membership, which is still fairly inexpensive. That's 19 a month. The investors club is 10 a month. Then I have a coaching club, which is currently 25 a month, which provides 2 meetings every month where you can meet with me directly, and I can do some hand holding. I can talk about what my goals are, what your goals should be, maybe. Now I am going to increase that price here before too long, thinking maybe sometime this summer I'm going to increase that price. I haven't quite figured out when and how much. It won't be a huge jump. It'll be, right now it's originally I set that one up just to kind of encourage people to try my membership and wanted to offer something a little bit more, but with my consulting and other practices, it's needs to increase compared to my $19 125. It just doesn't fit well. So, you may want to take a look sooner than later again, because I might change that. Now the coaching club gets everything that the other two get. And then we have the 2 a month Zoom meetings where you can schedule it and, according to your schedule, and we can, talk about whatever's on your mind. So now the other important point with setting goals that I think is really critical is you need wins. You need to trading just in general, and it's also true of trading, options trading. You're going to have some misses. Everyone, has losses. It comes with the territory, and you have to be patient. You have to stay in the game. You don't want to give up too quickly because you've had a few losses or something hasn't worked out well. What I encourage people to do, and it ties in with the goals, is to look back. What did you do right? What did you do wrong? What could you possibly do better? Which trades worked? Which trades didn't? Which are your money trades, meaning they seem to work every time you make them, month in, month out. Like Iron Condors have worked really well for me, so I continue to do them, and I'm probably going to continue to do them just to bring in some extra income. I don't necessarily look to own IWM, but staying in the game is so critical. I do notice at times people give up, they lose faith, and they stop trading, and it definitely is a learning curve. And if you give up too quickly, like anything, you're going to miss out on some potential scenarios where you can do much better. So again, stay in the game. And I think that's where a membership makes a big difference. If you're going it alone, it's a lot more difficult. So that all being said, let's jump into my May trades, and I'll share with you how I did back in May. And like I said, we'll talk a little bit about all the assignments that occurred and why they occurred. So let's jump into that next section. Okay, here is my May spreadsheet. This contains all the trades that I did in May. The first one, let's scroll all the way to the top, was CVS. This is one I did early May. And I have liked CVS a long time, and you can see it was a 72.50, 62.50 vertical put credit spread. They came out with not so good earnings, and they dove major. I believe they're currently right around $58, $60. So they dropped pretty close to 30%. I think they went from in the mid 70s to the high 50s. So, and then soon after that, I was assigned. Now, this assignment actually occurred within my Roth, which was a smaller account. So, and I had 2 contracts, so it was 200 shares. And because of that, I was not able to keep all those shares. So what I ended up doing was selling 100 shares, keeping 100, selling the vertical or the puts that I had purchased. And overall, I calculated that it was like a $1,536 or $1,536 loss. And that's what I'm calculating here. It's actually in my total numbers. Now, this has changed. At one point, I think CVS did recover some. It's down big today. I believe Walgreens came out with earnings, which or their guidance was real negative. So CVS is also dropping just like Walgreens. So the what I learned with this one is I had done it in the wrong account. And I remember when I made that trade thinking, well, I shouldn't do this probably in my Roth. I really should have done it in my IRA, or I would, if I had done it in my IRA, I would have kept all 200 shares. But this is probably my biggest loss, if not the biggest. It's one of the biggest losses I had this month, just in May. So next I did a Square. This is a cash secured put, 65. And I actually rolled it. And I made some pretty good premium, $337 in premium. And it was like a $13 or 13.5% return. Being a cash secured put, the required capital is a lot more. So you can see here it's 11,252. And I currently still own these shares. So I keep, or not shares, this contract, these two contracts, I keep rolling them. And I believe Square is right around 63 or 64. It seems to stay in that range. It did shoot up higher than that, but I wouldn't mind being assigned some more of Square. I do think long term they're going to do really well. BP, this is the third trade that I made, another really good company. This was a covered call. I currently own 200 shares of them, and I literally just rolled it was 38.49, and I just rolled the covered call, which was expiring on 6/21. I rolled it to 10/18, and I brought in 203 and 40 cents. And this was right around an 8% return. So like the cash secure puts, covered calls don't make huge returns. I'm not going to go into tons of detail with these, but I have Devon. I also did roll for Devon. Rolled it out to 620.25. I believe I increased the strike. Yeah, I increased the strike from 45 to 50. Devon had gone through a rough period, a lot like CVS, and it wasn't doing well. And then it turned around and shot through the roof. Here I brought in 303 in premium, and I had to roll pretty far out, 620.25. So it's like a 3% return, which is right around the dividend. So I was pretty much able to double the dividend on that one, or pretty close to doubling the dividend. Then I had another IJH. This is a ETF that I like. Yeah, I believe it's a value, like Russell 2000 value companies. Rolled it from 55 to 56, went out to November and brought in $633. So brought in quite a bit of premium. Another Devon, I was assigned 400 shares of Devon. So again, it's very profitable. It's worked out quite well for me. It was 51.22, 47.50. I rolled to 52.50 out to March of next year and brought in $297. So you can see the covered calls and the cash secured puts bring in a lot of cash. Next is Zoom. This is a trade that I like to do. I own 100 shares of Zoom, so I did what's called a reverse jade lizard. It's an iron condor without having to buy the call protection, primarily because you already own 100 shares, or the shares, you don't need to buy the protection. So I did a 60.55 put and a 65 call, and this it was 62.50 at the time. Zoom's had a tough time recently. It seems like there's been no news, but it's has kept going down. It's like 57 now, which Zoom has been one of my best trades over the last couple of years. So it's been kind of surprising that it's kind of had a rough period. It seems like a lot of the mid caps have, especially technology mid caps, have had a rough time. So I brought in good premium, 413. Being the nature of this type of a trade, I don't need much capital because I already own the 100 shares. So I don't know if this is accurate, this 3,900 return. I think if I put the value of the shares, which we can do that here, if I put an additional, let's say 6,000, yeah, it's like a 55% return. So it comes down quite a bit. But you can measure these things different ways. But it's turned out to be a a good trade, other than the fact that Zoom is just, like I said, it was 62.50 at the time and it's come down. Airbnb is another new trade that I did, vertical put credit spread, 140, 130. And it was a very profitable trade, 147% return, which is one of the highest that I've had. And it's because it only had a 44 DTE. And I brought in $301. And here you can see the required capital is just the 2,000 minus 301.28. So worked out well. Coca-Cola, I do a lot of these Coca-Cola trades because this is what I've done for the longest period of time. So I just did a new one. 2 at 67.50, expiring 11/15/24, 29 delta. And that brought in like $198. So this is one of the trades I did close. The App Lovin' company, 57.50, 47.50, and it got really profitable quickly, so I closed it fairly quickly. ACLS, another one that got into trouble. It actually got pretty deep in the money. Here you can see it's 112. I did a 110 and 90, and I brought in some pretty good premium, so it was also a pretty good return. But I believe it's currently, it may be as high as 130 now. So it's one I'm probably going to be able to close here before too long. Here's another assignment. So this was Zoom. This was kind of a forced assignment. I kind of sold this cash secured put so it would be assigned. And it worked out pretty well. Now I have 200 shares. Now if I calculate based on the current value, which was 56.34. So Zoom had dropped to 56.34. I believe it's 58 now. So 538 loss is what I'm showing for this one. Which again, that's questionable. Some of the interesting part of these assignments is how to calculate it. I'm going to show you where I've calculated it as a loss and where I've actually not calculated it as a loss, and just show you the difference in revenue with that, or difference in overall premium. Logitech, another one I closed. I talked about this in one of my recent videos. Very profitable. Apple, I also closed it. It shot through the roof recently, so was able to close it fairly quickly. Both of these had good income. 290, what was it? 243 and 191. And these were just actively closing them. It wasn't a new trade. I'm trying to close more and more of my trades. I'm hoping I start to get to the point of closing about 30%. AMD, I think this one has been closed fairly recently. I believe I might have closed my AMD trade last week. I'll have to look again, but I rolled it and I brought in another $330. And again, another really good return. I've been able to do quite well with AMD. CF Industries, another one that got in trouble at one point and now I think it's right around 74, but this was another roll. And I brought in, let's come over here, and 326. I believe that's the right one, 100% return. Yeah, so it's been fairly profitable, and I think I've rolled it a couple times. And then Tapestry, this is one that's in a little bit of trouble now. I believe it says current price of 40. I think its current price is like 42 or 43, so it very well might get assigned to me. It's a good retail company. I think they own Coach and a couple of high-end retail type products. And they pay a good dividend and they have very little debt or maybe no debt. Shopify, this is another one that got assigned. And I think they missed guidance and they dropped pretty big. At this point, they were 58.64. So, and I had 200 shares assigned to me, and was $146 loss is how I'm calculating it now, mainly because its current price is $64.27. So even, that's a small loss. I believe as of the last day or two, it may be over 65, so it wouldn't even be a loss. And I'm happy to own Shopify. I've recently sold several covered calls on it, and it pays really good premiums. Zoom, this is the covered call that I did at 70, and it brought in pretty good premium. So even though it was assigned to me, I actually rolled it. This was a roll. Did I not mark that as a roll? No, I did not. So I brought in 261, and as a covered call with 38%, that's really high. IJR, another one of the ETFs I like, doesn't have the best expirations, but I've owned them a long time in my regular account and have done pretty well with them. And the premium is typically good. I brought in 415, rolling it from out to 117.25 from 816.24, and I increased the strike from 107 to 110. So, and here I'm using the full amount, which actually should be lower. I think I've got like a 50% profit in there. So it's probably a little bit of a better return than that. XLE, another ETF that I like, did an iron condor with them, and I believe they're currently right around 90. So it was a 100 call with a 105 outer call, and then an 87 put with the protection as an 82 put. And these were the different deltas, 21.64 for the put and 23.93 for the call. So, and most likely this one's also going to expire out of the money. So 264.60, 141% return, based on the 735.40, which again is the two contracts. It's the 1,000 minus the 264.60, since they're $5 spread. So this has worked out really well. This is one of my only $5 spreads, and I'll probably do more of them. But it's been a very profitable trade. CVS, this is the covered call. Once I owned them, I was able to write a covered call on them. Brought in 196, so not bad, a 6% return. They currently pay pretty close to a 5% dividend. So just with the dividends and the covered call premium, it's like 11 or 12% a year. Twillo, this is one that may get assigned to me. It's a roll of a cash secured put. I believe it's only one contract, but I brought in 233.64. And a 16% return on a cash secured put is pretty good. So it'll be interesting to see what happens with them. Surge, this is kind of one of my weird trades. They were on Seeking Alpha. I did like what they were doing. Since then, they're dependent on the connectivity program, which Congress did not renew. So they missed earnings, and then because of the connectivity program, they dropped. Now their current price, I believe, is $1 lower than that. So this is kind of a long-term play, but I was able to roll it, make a little bit of premium. So I currently don't own any shares, but I do. I think I purchased a call, I think at 250. I think 5 of them. So this is kind of a wait and see. I think long term it's going to be a good company, but it's not a huge investment. I think overall I maybe spent $2,000 or $3,000 on it, but we'll see. This could be one of those that ends up being a big loss. Polaris is another one that it's just been hammered recently. It's done really well over the years. It usually traded in the 120, 110 range, but I did an 85.65. And this was this a roll? No, this was a new trade, 410. And did pretty well. Oh yeah, this is in my Schwab account. I'm currently collecting a lot of cash in my Schwab account, so I really don't want it to be assigned. So I'm going to try to go through these a little faster. I have another Zoom trade. This is a vertical put credit spread. This is another one I don't want to have assigned. When Zoom had recovered, I ended up rolling it, thinning out the spread back to 60.50, and brought in some more premium. So you can see a lot of trades. Next was WBA, that's Walgreens. I own 400 shares of Walgreens, so this may be my big loss for this year. This is probably something I may take the loss at the end of the year to kind of hedge against my other gains that I'll have in my Schwab account. But luckily, this is in my taxable account. You can see I had a 22.1250, and it dropped all the way to 17.93. Now it had earnings today, and I believe it's dropped right around $11, so it's just been completely hammered. And I took a 772 loss, which is probably higher now. This may be my overall big loss for the year. Um, this is another ACLS, so I was able to do another trade with it and brought in some pretty good premium. That was 54%. I brought in 344. A Shopify trade. This is the covered call. So once they were assigned, I did a covered call. It's 70, and it brought in a lot of premium, 532, which is like a 13% return. Again, because it's a covered call and you used the total cost basis. So pretty interesting. Worked out pretty well. And Shopify right now is profitable. I did a new trade on AbbVie, 155, 145. 23 Delta brought in 275. That's like a 66% yearly return. Another app 11 trade 70, 60. It's a little higher. They've shot up quite a bit. A 20 Delta and brought in 369. So some pretty good premium for that. UPS, I did that not long ago. First time I've traded with them. 27 Delta, 135, 125, brought in 305. This is like 115% return. I rolled Airbnb, I believe. That's not the first. Yeah, I rolled Airbnb. Brought in another 312. Next, another trade on AMD, another roll. Brought in another 302, which is like an 82% return. So AMD's worked out really well for me. And so far, Airbnb is to ASO. This is another one that may get assigned to me. This is Academy Sports. It's a cash secured put, 57.50, but it's currently in the money by a couple dollars. And I brought in for this roll 337. It's like a 10% return. So again, it worked out pretty well. Then I have IWM. I closed this trade, so just showing where I actually closed one path. This was my other big assignment. I had 4 of these assigned. It was 21.15 and they got assigned. It was 20.40. I believe it dropped majorly. It dropped all the way to like $11 or $12, like a 30% drop. And this is my biggest loss for May. Now they have recovered a little bit, so this loss is probably a little less than what I'm showing here. Maybe more like 1,400 or 1,500. I think if I look, no, I have a spreadsheet where I've calculated the loss. But my hope with Path is that I like their product. They had issues. They had to let go of the CEO. I think they're going to regroup and do well. It may take a quarter or two. So I'm waiting to see. I'm hoping it doesn't turn into another Walgreens or Lumen or one of those kinds of companies. Now I'm assuming Walgreens is going to continue to struggle. I could be completely wrong. It might pop too. But I do think that Path potentially could pop. I could be completely wrong. It could go from 12 to 6, or even lower, but they're well run, or now they're well run. The original founder took over as the CEO. Okay, next is Pure Storage. This has been another really good trade for me. It closed it early. It was very, very profitable. I think I talked about it and all these blue ones in last week's video. Mara. I'm using Mara as a learning example. And it's worked out pretty well. I've been able to roll it a number of times. I brought in so far with it almost $935. And this one was also 121% return. So I don't really do Bitcoin. Mara is a miner, a Bitcoin miner. So I'm kind of learning about Bitcoin. What's interesting, one of the subscribers mentioned last time that they keep a good bit of the Bitcoin that they mine. So, that's something people forget, that they own quite a bit of Bitcoin. They keep a certain percentage of it. So, which keeps them even healthier. I think they could end up doing well because they could go into other industries. they do the data centers related to Bitcoin mining. So they could do it also for AI and for other needs. So something I'm keeping my eye on. Cisco, I've owned Cisco a long time. It struggled a bit recently. This, I rolled, this was a covered call and I was able to roll it. There's 4 contracts. So I brought in quite a bit of income, 386. It was a low percentage. At that time, I rolled it down. So I think Cisco's going to come back. I think it's going to get a good bounce. And then Google, this was another interesting trade. I did a video on this a while back. This is what I call my shielded wheel. What I did is I bought 100 shares of Google at the time for 171. Then I sold a vertical put credit spread and I sold a covered call. So the vertical put credit spread was 165, 160, so a $5 spread. And then the covered call was 180. And I believe they were both around a 30 delta. This was expiring 7/19, so a shorter DTE. It was 171, Google was at the time. And I brought in 407, and this had an 18% return, but that includes the price of buying the 100 shares. Now, what's interesting is Google's gone up to, I think, right around 186. So, if I take into appreciation here, I could probably add in another $1,000. So this would be, 1407. So this is a trade that's kind of new for me. I wanted to own some shares, and I'm glad I did it currently, unless Google goes through a tough time and nosedives. But now I currently own 100 shares. The idea is instead of, just selling vertical put credit spreads, you buy the first 100 shares, and then you continue to do, once you own the 100 shares, then the next time you do, when they get assigned to you, you'll be doing two covered calls, one vertical put credit spread. So it's a way to increase the premium and potentially bring a lot more premium in it. I did a video on this, I believe, like a month ago that talked about it. I think it was, I forgot how I worded the video, but it was like one of my best trades or one of my new trade ideas. So I'm going to continue to see how that goes. I may do it with a different company. I may do it with NVIDIA if they keep dropping. Maybe if they get down to around $100, I might also do it with them, or with Apple, or even Amazon. So I did 39 trades this month. That's a lot more trades than typical. So here, let's just do a breakdown of, I did 10 covered calls. I did 3 cash secured puts, 23 vertical put credit spreads, 1 shielded wheel, which is that new one I just showed you with Google, a reverse J lizard that I did with Zoom, an iron condor, for a total of 39 trades. So this is probably the most trades I did in any one month. Now, how it breaks down and these are adjusted for assignments, so this is where I took the losses. So I did 606 in my Schwab brokerage, which is like a 0.1 or 1.26% return. And this is just for premium. So part of that has to do with some of the assignments. For the Fidelity, I did 46.76, just above a 1.16 or a 1.16 monthly return, which is almost a 14% return. And in the Fidelity Roth, it was an actual loss because of CVS. I took such a big loss with that, it made the month kind of a loss. So total premium was $49.08. Dividends were $19.24. And these were actual numbers. This is averages for my dividends, but the interest is actual. This is the actual interest that I brought in. So total for premiums, dividends, and interest, $8,042. Now, if I hadn't brought or lowered the premium, it would have been more, almost like in a 12,811. And the main reason I talk about, how should you best calculate these is you give you, for instance, a path pops and it's like 2021. It's actually a really high gain. And in most months, like I think these were the first couple of assignments I've had maybe in 6 months. It's been quite a while since I've had any kind of assignments. Now, without the assignments, The Schwab brokerage was like nearly 3% a year, so not as much in there. I do mostly cover calls in there, and I end up paying a lot of bills out of my regular brokerage accounts, but that's probably on the low side. I've had much higher in previous months. Now, in my Fidelity IRA, it's nearly 2%, so a 21.2% when you look at the premium. And then for the Fidelity Roth, if I had not included the CVS loss, I would have had almost a 25% return for the year. And not for the, yeah, if it was calculated on a yearly basis. This is just this times 12. So you can see the difference, and it would have been 12,811 versus the 8,042. So, and this was the only month where I had this kind of happen, where I've had so many assignments. Most of my other months, like this month, I may have one, I may have Polaris, but the assignment was pretty close to its current value, so it won't have any impact like it did in May. And it seems like that happens from time to time. But again, that brings back staying in the market, because I still did better having done this and having made these trades. And then this month's going to be a lot higher. Last time I had a month like this was probably 2022, when we had kind of a rough year. So what is the best way to account for assignment? Here are some of the notes. The losses are based on their current value. So that's how I calculated the losses. I looked at, what were they assigned at? So if they were assigned at 21, like in Path, but then the current value was 12, then that's how I calculated it, minus any premium that I had brought in. Currently taking cost of shares assigned and subtracting current value. Shop would have been a big profit a few days prior. Yeah, Shop, I believe, got up to close to 70 at one point before dropping down again. Polaris and Zoom were great premium gatherers for the longest time. Something changed in May and June. Looks like, yeah, and this is what I was talking about. Looks like mid-cap tech companies were down across the board, at least the ones I invest in. So Pass, Square, Zoom, PayPal, Shop, Twilio, DocuSign. The exception was Palantir. And that's just what I noticed. I do notice that a few have popped recently. Shopify has popped. Square stayed about the same. Path, of course, is still way down. Twilio is still about the same. I think DocuSign might have popped a little bit. And Palantir has definitely popped a bit. WBA is the biggest loser. This is Walgreens. Can use it against taxable gains, which I'll make that decision probably in November, December timeframe. So one thing I'm trying to do compared to previous years is to get rid of my big losers. Try to find the ones, stick to the ones that work. A lot of times, if you hold on to companies like that, they may, drop from 12, or, I believe it dropped from 21 to 12, but it could very well drop to 6. And since I sold off both Big Lots and Lumen, that's happened to both of them. I think Lumen's only like $1 now. And I think Big Lots may be like $1.50 or $2. So I'm glad I got out of them when I did. And CVS was in the wrong account. Should have been in an IRA, not a Roth, because of the account size. So that's what I wanted to show you guys. So the other thing I've been doing is going through and trying to pinpoint the trades that were the best, looking at the ones that had the highest returns. So like this 157 AMD, so I'll probably do more trades with AMD. They've come down recently, so I might have an opportunity. And this, what kind of trade was it? It was a vertical put credit spread. I also noticed a lot of the iron condors have worked really well. Like this one's 147, which is Airbnb, but again, it's fairly close to the money currently. So, and then let's see, were there any others? I think this 141, who was that? XLE, so that was the iron condor. So I noticed all the iron condors did quite well. Which one is this? 115. UPS. So I'm going to go through these, and what my plan is to maybe take a little bit more risk on the trades that I deem as my best trade. So maybe instead of doing 2 contracts, I'll do 3. And I'm still trying to shorten the DTEs. I'm also trying to avoid earnings, and that seems to be helping too. So that's what I wanted to share with you guys. Sorry it's been kind of fairly long video, but please leave a comment. Let me know what you think. Let me know if how you figure in your assignments. How do you handle the calculations for them? And as always, thank you for joining me.